Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that China's economic stumble is the real elephant in the room for the global economy, and not the Russian invasion of Ukraine. But first, in the US, there was a surprisingly negative regional survey of manufacturers in New York. The Empire State Manufacturing Index shrank to minus 12 in May, from plus 25 in April, missing market forecasts of plus 17. This big miss comes after an unusually strong April result. House prices across Canada continue to slip under the weight of rising interest rates, with the nationwide average price of homes falling to $746,000 in April, down 6.3% from March's average of $796,000, a dramatic $50,000 retreat in just 1 month. And Japanese machine tool orders for April came in very strongly again, up 25% year on year and the second stellar month in a row, suggesting the world's boardrooms are still investing in capital equipment. It was the second highest order level since 2018, only beaten by the March 2020 result. And Japanese producer prices surged 10% in April from a year ago, rising at a record rate as the Ukraine crisis and a weak yen pushed up the cost of energy and raw materials. And Japan is experiencing CPI inflation and expecting it to hit 2% this year, which is very unusual for them, and they're having an interesting debate about whether this will be transitory or not. That assessment greatly affects how the Bank of Japan approaches its response to the current inflationary burst. In China, retail sales in April were very grim, diving 11%, and these are official data. You can almost hear the gasp in Beijing. This makes the recent warnings from Premier Li look inadequate. It will be no surprise to learn that their official jobless rate has risen from 5.8% to 6.1%, with anyone's guess at underemployment. The fall in China's industrial production in April was massive too. And China's real estate investment also declined in April, as home sales, land purchases and housing prices all set new lows. Analysts are now downgrading their expectations for calendar 2022 Chinese economic growth. The US Treasury 10-year yield will start today 5 basis points lower at 2.88%. And the price of gold starts today up $4 since this time yesterday at $1,816 an ounce. And oil prices are $3.50 higher today, now just under $112.50 a barrel in the US, while the international Brent price is just under $113.50 a barrel. And the Kiwi dollar will open today unchanged against the US dollar, still at 62.9 US cents. Against the Australian dollar was softer at 90.5 Australian cents, and against the euro was still at 60.4 euro cents. That all means our trade weight index starts today at 70.6, which is unchanged from this time yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.